Let's start big picture.
Right.
You run the world's largest asset manager. You meet continually with heads of state and central banks. You have your finger, I think it's fair to say, on the pulse of the global economy. Larry, are you optimistic or pessimistic right now?
I would say relative to the mood of the markets, I'm probably a little more optimistic.
Why?
Because I don't think the world is that bad. I mean, it's not as good as we thought when we entered 2018, and we had a huge rally in the first quarter. And then throughout 18, the market started falling and dissipating, and then we had a real crescendo in the fourth quarter, and we saw a real capitulation by so many investors pulling out. Well, since then, we've seen a lot of investors realize it's not so bad, and we've seen almost the total opposite of the fourth quarter. The fourth quarter, you couldn't find a bid to sell anything. In the first quarter, you can't find an offer to buy anything. And that just tells you I would say, the tension of the marketplace. Mm-hmm. But let's review the world. Okay, China is slowing. It's slowing to 6%. Okay, that's not so bad.
Well, that's what they say.
Okay, 5. I mean, actually, the cities are still growing quite nicely. It's the outer region. China has experienced the same two-phase, two type of economies where one part of the economy is growing very well and one's slowing down. And so they're going to experience the same type of, maybe populism, unrest issues there in the future. That's another story. Japan's growing at 1%. Southeast Asia is actually growing quite nicely. You're seeing supply chains moving from China into the Southeast Asia region. You have Europe, which compared to where we were January or March of 2018, we were much more pessimistic, and I'm very worried about Europe. That doesn't mean Europe's going to be into a recession in 2019, but it's not going to be, maybe, just maybe it's a 1% growth, probably closer to 0. And the U.S., we had the sugar high from the tax reforms, and we all anticipated that the economy will slow down after the sugar high, and that's what's happening. But where's the U.S. economy this year? 2.5, 2.6, 2.7. It's not so bad. Consumer confidence is still good. And so I would almost call this a Goldilocks moment where it's not so bad, it's not so good. Central bank behaviors are probably more on the dovish side now from where they were in the fourth quarter. So I would say it's a time for investors to be a little more relaxed. I don't think we're going to go, much higher than we are today. And
you mean stock prices?
Markets, but we're going to be fine. What I worry about still is rising populism, which in what we're witnessing from rising populism, we're seeing shorter-term behaviors by governments. And, I talk quite a bit about long-term behaviors.
You do.
And it gets harder and harder when you see governments are becoming more and more short-term. Getting back to China for a minute, we may debate where the economy is going, but it is fair to say the Chinese leaders are focusing still on the long term.